We have a quick question here from a new subscriber asking about the difference between trading and investing, and asking, is it the same thing, and whether one is better than the other? So this is a great question, actually, and one that doesn't really have a right answer because it all comes down to your goal. So in short, there's a couple of common differences between investing and trading. I don't think the two things are the same, but I do think that there's a hybrid, a combination of the two that's interesting to look at. So the first difference between investing and trading is the type of market engagement, I would say. So investors are mainly seen as having a buy and hold portfolio. So they usually invest either lump sums or regular contributions in an attempt to make use of things like compound growth over longer periods of time. So they are buying and holding stocks and real estate and bonds and retirement annuities, etc. And the aim is to build wealth over a longer or extended period of time. And they are usually a lot less involved in the markets, as they don't usually actively manage those investments. Well, let me say most investors don't, because they aren't going to jump ship in a month if things aren't looking good. They play the long game. Where with traders, on the other hand, they are a lot more frequent and a lot more engaged in the financial markets, and attempt to generate profits by short selling or buying assets that they feel are either overvalued or undervalued, and hope to make a short-term profit that way. And the main goal of trading is to try and outperform the traditional buy and hold investor by trying to basically capitalize on short-term volatility in the market, whether in the weeds on a daily basis or more swing trading or position trading based. Now, the other big difference is time horizon. So investors are usually playing the long game, like we said. So they don't trade their portfolios usually actively, or actively manage it like a hedge fund or a fund would. They buy and hold particular assets, whether they are stocks or bonds or real estate, as we said, and they plan to buy and hold them for a long period of time, probably minimum 3 to 5 years. And then in the case of retirement savings and investments like that, much, much, much longer. Traders, on the other hand, are not playing the long game. And depending on the type of trader that they are, they will either actively manage and trade the markets daily, weekly, or monthly. But the point is that they are actively involved. They're not looking for the long game. They're looking for short-term opportunities, for short-term profits. Then you can also look at the overall goals between the two, right? So investors either don't have the time or the inclination to spend time actively watching the markets. They don't mind the possibility of going through ups and downs in the market, because they're in it for the long run. Now, let me just quickly turn down that squawk. So they're in it for the long run. They're not going to be stressed out if there's ups and downs in the markets, unless you are like a property mogul. If you buy a house right now as an investment, you probably aren't planning to sell it later this afternoon, right? You're planning to buy it and hold it because you think, given enough time, that house or that investment or that asset will be worth a lot more in the future than it is right now. So the main goal in investing is buying and holding for longer periods of times. Now, the main goal for traders, as we said, is that they think they have an edge in the market, which will allow them to find and exploit short-term conditions in the market to make smaller but quicker profits, with the aim of basically outperforming regular investments. Now, this is just generally speaking, right? Of course, some investors will also be traders, and some investors taking a trading approach to their investing, and some traders might be taking an investing approach to their trading. So there's a little bit of a hybrid that goes along with this. It's not either or, really. Whether one is better than the other will, again, largely depend on what goals you have. So for me personally, and don't take this as as investment advice, just in my opinion, personally for me, I have always found that diversifying is the best way to look at it. And what I mean by that is that, yes, I have a trading account that I trade regularly, daily, and my main aim with that account is to basically outperform other benchmarks and make decent profit. But I also firmly at the same time believe in having a regular investment portfolio that runs in the background without me worrying about it. That includes investing in real estate, as well as having, a regular retirement fund to which I contribute monthly, etc. Even though I am a trader, I don't want to put all my eggs in just one trading basket, because if imagine something happens to me tomorrow and I can't trade anymore, then having everything in one trading basket will be a very big problem, right? But having both trading and investing exposure is, in my opinion, personal opinion, the very best approach. Basically getting the best of both approaches, if you will. So I hope that helps with your question. Any others, please don't hesitate to let us know.